Welcome back, everyone. Today I'm speaking to Tim Seymour, manager of the Amplify Seymour Cannabis ETF. Welcome, Tim. How are things?
Great to be here, Hayden. Beautiful spring day in New York, so no complaints.
Yeah, lovely. All right, well, let's dive in. A lot of listeners listening into the show today won't have considered, I don't think, investing in cannabis-related ETFs or companies. So for long-term investors, what's the investment thesis here? Give us that elevator pitch.
So the big picture is that the cannabis is an industry where the addressable market continues to grow, and it grows independent of the federal, the legislative framework. This is a consumption story. Right now in the U.S. alone, I would argue we're talking about $100 billion addressable market. Globally, some of the things that are unfolding in the U.S. are obviously unfolding around the world in terms of the legislative progress for cannabis. So for investors that are investing in consumption and in some cases maybe traditional CPG, consumer packaged goods, this is the new frontier, and it's a massive industry that is still very inefficient, very liquid, where you can make. We'll get into how cheap or not cheap it is, but I think that the story is that this is growth. I'm someone that spent most of my career investing in emerging markets and new asset classes. So, cannabis to me was an obvious place to start investing 7 or 8 years ago when I really started to dig in, because again, I invested in emerging markets and as someone that was fascinated by these high growth economies and these markets that were continuing to leapfrog the traditional kind of consensus developed world, and cannabis is very similar. And I can make more of those comparisons as we go on. But cannabis, new industry, high growth, high risk, high reward kind of dynamic. But at some point, the idea here is that you're talking about a sector that will be a very sophisticated, traditional consumer industry. And whether it's consumer discretionary, whether it's consumer staples, whether it's some of these subcategories and subsectors is really up for debate right now. Who knows?
Yeah, great. I want to dig into the total addressable market just to cover off that investment case. But before we do, let's circle back and cover your background. You referenced your emerging markets background and experience. So as someone that has invested in new or early stage asset classes before, to what extent did that prove a useful formative experience for investing in cannabis, do you think?
Well, one of the biggest dynamics for cannabis has been the obstacles to investors to invest, and also just some of the dynamics of a nascent, immature, developing industry. And so, I have a background where I ran a long short EM hedge fund for about 13 years, two different products over that time. My early career was when I left business school and got onto Wall Street. I was trading, then sovereign debt. So G24 doesn't even exist anymore. But we all live in a world where we're aware of what's been going on with government bond yields and spreads and some of the macro. EM became, to me, with that training, EM became a lot more interesting because I just felt like this is where the new frontier was. Went on to live in Russia, to invest in Latin America, Asia, and so that background taught me a couple things. One is that very much a lot of your return profile is driven by the macro or driven by some kind of catalyst related to either the government, the legislative environment, global macro dynamics around currencies or interest rates. And then there's another part of this is very much a bottom up. You're trying to find great companies that in many cases are either newer companies in their sector because this industry didn't exist before. But I think all of this is packaged around investing in an environment where liquidity is less, where there is less institutional participation, where there is significantly higher volatility, where there is maybe less information. And so, that experience in EM is perfect for cannabis because, the cannabis story is obviously on some level very much about progression of legislation and to what extent, we're going to see a headline one day that says Congress is ready to approve maybe in the wish list form. Maybe the first one's going to be safe banking. Maybe the next one's going to be tax reform. Maybe the next one's going to be interstate commerce in the sector. Maybe it's going to be global. But I think these are the things that investors are probably signing up for. But to me, as someone that's been investing in emerging markets, I'm never investing with the expectation that I need to see this headline to be successful, because I think you could be very frustrated. I think the view that I have from being in emerging markets, especially during periods like after long-term capital and the Russia default of '98, or what went on in Brazil in the early 2000s. I mean, things can always get worse. Things can always go lower. And I think you have to take an assumption that you really need to know the companies you invest in. You need to have the confidence that these are companies that are going to survive difficult macro, maybe lack of access to capital markets. So we can spend a lot of time on that, but I think it is important that you've had some context for understanding how this type of an asset class could trade. And that was one of the things that really attracted me to cannabis. I felt like I had seen this before.
Yeah, got it. Okay, well, let's get back to that investment case then, and we can dig into your fundamental sort of research process in a bit. But I read on your website, I think, between 2019 and 2021, global spending on legal cannabis nearly doubled, growing from $14.9 billion to $30 billion. And I think you referenced $100 billion being the total addressable market here. So is that the figure now, including, medical cannabis, those sorts of applications?
It includes medical, it includes adult, but it also includes illicit. So
right.
The black market, the gray market, and I think that's the good and the bad here. So so the size of this industry, cannabis doesn't need to open up the eyes and ears and consumption patterns of more people. I mean, people have been consuming cannabis forever, and so. When I talk about $100 billion addressable market, I think in the U.S. alone, I'm really just talking about the market that exists now, not the market that we want tomorrow. And the illicit market's it's a friend and a foe. I mean, on some level, if you're an illegal operator, you're operating in a world without taxation. You're operating in a world where you can move across state lines. You are able to utilize a lot of the either distribution infrastructure that kind of exists for other people, other industries, but doesn't exist or isn't allowable for cannabis. So yeah, it's very much about adult or the rec market, the medical market, the illicit market. And then of course, there's a measure that's harder to and more debatable, but either way, the ancillary market. So what is the opportunity for service providers, for software, for analytics, for insurance, for banking, so it's we're not even really counting those numbers, but I'm certainly investing with an eye on those opportunities as well.
Yeah, got it. Importantly, though, I think it's worth referencing that most investors can't get cannabis asset exposure, or a lot can't. I mean, to what extent is there a big wall of institutional capital ready to be allocated to these markets in the near future?
I think so. I think investors that are investing today are ahead of this wall of capital, that are institutions that it's not about stigma. It's not about a corporate charter that says they can't. It's really about can they put the position on? Is there liquidity? Do they have access? Will their prime broker allow them to own it? Can they custody the shares? And then there's some issues around. I talked about liquidity. I mean, some of that's a self almost circular dynamic. I mean, the industry is more investable if you can invest in it. So I do think that those are some of the issues that I think the institutional capital, but retail investors today, as they have seen in other sectors, and sometimes, certainly a few years ago, we'd often hear cannabis and crypto, lumped into the same place. Very different. of course, but to the extent that there's still not a real institutional investor base, again, good and bad, creates opportunities, probably creates more volatility, probably ultimately, one of the great things I remember about being an emerging markets guy was for example, if you're investing in emerging market resource companies, oil and gas companies, and it's 2002. Like the Holy Grail wasn't that Tiger or Blackstone or Soros would come in and buy a Brazilian oil company, or that the analyst community were starting to produce research on it. Actually, I should say, it wasn't so much that getting big investors involved in the sector. It was really when you got the sector specific investors involved. So I was running a brokerage and a small investment bank in the U.S. and that was focused on Eastern Europe. And so it was one thing, we were bringing deals for Russian oil companies, and it was great to have the hedge funds that we liked to buy, and again, hedge funds that could invest there. But when the industry really took hold is when the biggest mutual fund players in the world, like a Fidelity, like a Putnam, like a State Street, were actually had their sector analysts, their oil and gas analysts wanted to own Russian or Hungarian or Brazilian oil companies. And the same thing is the case in cannabis. So at some point, cannabis will come of age when, it's not either high growth, small cap investors or investors that have a unique mandate to invest in cannabis. The real coming of age will be when CPG investors, analysts, big funds actually want a 1% piece in their portfolio of cannabis. That's when the industry will have come of age, and that's that institutional wall of capital I'm referring to. So it's a long answer, but we're still such early days that I think this is ultimately a major tailwind for those investors that are here now. It's we can get into it's been a volatile and painful couple of years, but I still think that holds. It's never been truer.
Yeah, absolutely. And if we dig into that coming of age, then I imagine that at least in part is down to broader legalization. And I'm keen to understand to what extent that informs the overall investment case here. Is it that the ultimate potential in the cannabis market rests on that broader legalization, or has a lot of that already been priced in? Talk to us about the proportion of the investment case that legalization takes up.
Look, it right now it's the biggest portion, and we've had these periods where the expectations were high, and we've had these periods like now where it's probably never been lower. And so and it's with great irony, because at this point, I think in the last couple of weeks we've had Kentucky be the 38th state that's signed on for a medical market that will go through a state legislative process, but will probably come online sometime in late 24, early 25. 75% of the U.S. lives in a place where cannabis is legal in some form, either medical, adult, both. So it's not as if the wheels don't keep turning, and the march onward for the legislative process state by state. It's really exciting, right? And so that's the practical reality. The frustration is, so if you had asked me 3 years ago, would we be in this position where you had not just blue states but red states, and this kind of total adoption and destigmatization of the industry, I would have said, bring it on. I can't believe that. Great, no problem. I would have thought the industry would be that much higher in terms of a valuation perspective. Of course, that all comes in looking back on the last couple of years, right? If you think about where we came out of the election cycle in the U.S. in the end of 2000, I mean, you have a case where, first of all, you had a change in the White House. I don't think the White House, blue or red, has ever been a problem for cannabis, frankly. I don't think the Trump administration was against it. I think they had an opportunity to be very, obstinate, and the Attorney General at the time was somebody that actually never really formally condoned, but he certainly didn't press on the prosecution side. Certainly under the Obama administration, you got a lot of momentum going. The Cole memo was this memo that was written that basically said the federal government will let the states do what they want to do. And that laid a framework. But coming out of the November 2000 elections in the U.S., Biden administration, blue White House. But then when you had the change in the composition of the Senate, and you had potentially an opportunity to control the House and the Senate for the Democrats in January 6th, 2021, we had the Georgia runoff. When it appeared that it was tilting blue, the cannabis market went to the moon because the view was it was going to legislate right away in favor of cannabis, as if this was the number one issue for those in Congress at the time. It wasn't. But the blow off top for the cannabis industry was, I think, February 8th or 9th, 2021. Since that point, the industry is down 88%. Now, we've had different periods along the way where you've had these hopes that different pieces of legislation were going to get through. The most recent was in December of 22. So 4 months ago, if you woke up on the morning of December 5th on a Monday morning after a weekend where the Department of Justice had said, we're good with this, we've reconciled our issues. There was a lot of expectation that year-end lame duck congressional session legislation was going to push cannabis legislation into an omnibus bill like the National Defense Authorization Act, that was the expectation. The industry got so hyped up into believing this was going to happen that you had a 30% rally going into that. And then when that did not take place, and there was an expectation that it was going to take place, and then on top of that, a view that's, looks like coming out of November, that there really isn't this ability to push through in the new Congress legislation. Cannabis assets dove into year end. You saw a massive exodus, and really in 2023, it's been even worse. It's been at a time when it's been an extraordinary quarter for global assets, and first quarter of the Nasdaq was up 18%. You'd think, and high multiple tech companies, higher risk companies, companies that are less profitable, frankly, outperform the ones that are the most profitable. That's what happens when you have a risk-on environment. Cannabis was down conservatively 20%, more likely 20 to 30%. And so it's back to your question: how much is this priced in? How much is this a driver for returns? It's unfortunately been the major driver, and I think that that's both wrong. But I think on some level, it is important that the industry have access to capital, that the cost of capital comes down at a time when interest rates are going higher, right? So that the industry ultimately gets better treatment on its taxation. So one thing that probably a lot of your audience doesn't spend a lot of time, they don't have to focus on this, but there's something called 280E, which is an IRS or a U.S. Treasury dynamic that says if you're a Schedule 1 drug in this country, in other words, something that's illegal, of which cannabis is on a federal level classified as a Schedule 1, along with cocaine and heroin and things that, I would argue this is insane. But the taxation is such that you're taxed anywhere from 60 to 100% on your profits, and that includes also your inability to subtract cost of goods sold from your income statement. So it makes cannabis almost unprofitable universally, but certainly on a retail level. The vertically integrated companies have different classifications that allow them to have some part of their business have more traditional accounting. But I bring all this up because there are different things that are hurting the industry right now. That I think you took a piecemeal approach to legislation, did not have to have blanket federal, legality, that the industry would soar, would absolutely, what is that number? I don't know. Would it double? Would it triple? The answer is yes, at some point. As I know from many years in markets and many years in emerging markets, though, the old expression that says, tell me the headline, I'm not sure I can tell you what the market's going to do with the headline. I feel that way about cannabis, but I am very sure that these are big positives that would be a part of a re-rating moment for the sector. Right now, there's really zero expectation priced into the cannabis industry that you're going to see any legislation, even banking legislation that gives these companies better access to capital. The rescheduling tax issue is the one that I actually think there's more likelihood for, and I think that would be massive. But again, is that priced into the market? Absolutely not.
Yeah, fantastic. I mean, that's a great overview. And I want to return to a few of those points because I think we can finish on your outlook just to leave our listeners with something to look ahead
Yep.
for, particularly if we limit that to
Sure.
2023. But before we do that, let's move on to the ETF to understand kind of your process for identifying stocks and how you run that fund. So the Amplify Seymour Cannabis ETF, ticker CMBS. Within that, I understood critical to your investment approach is purity. That's a word referenced a lot on your website. I read that 80% of your
Yeah.
portfolio must generate 50% or more of their revenue from the cannabis ecosystem. So firstly then, why is it so important to provide investors with this pure play exposure?
Because there are a lot of industries that at some point might be involved in the cannabis space and might have a significant interest in developing a cannabis business portfolio, foundation, infrastructure. But right now it's about finding those companies that are here now, and
Yeah.
I think so. The reason we use that word pure is because there are a couple of ETFs that were some of the first to come to market in the cannabis space. That not only were they not run by portfolio managers who really were in the industry, who have an experience in new asset classes, who spend time and have spent time working with all the companies in the space, but they own tobacco companies, they own pharma companies, they own Scotts Miracle-Gro because they're a fertilizer company, and these are companies that have less than 10% of their revenue base, in cannabis or even ancillary cannabis. So in many cases, they're not even here yet. So that's the point. The point is investors who are investing in a thematic ETF want truly real exposure to that, not where there might be at some point. So I think that's the key for us to have cannabis in our name. As a U.S. 40 Act product, I mean, we have to be a cannabis fund. So CNBS, which is the, how would you abbreviate cannabis? I think there is those are the initials. So that's really what we think this is. And at different times along the road, we launched this fund in July of 2019, and we've been through 2 or 3 extraordinary cycles. At different times we've had different exposures that were based upon both the market that we had and the market that we believe is the most appropriate way to be investing. And that will always be my ethos and simply my investment objective, which is that I want to be investing in the companies that I think are relevant today, but those that I think are going to be the most relevant tomorrow. Primarily right now that is in the U.S. Primarily that is right now in the area of vertically integrated companies that do everything from grow to process to distribute and sell. There are those companies that are doing one of those things. There are companies that either have exposure to software, e-commerce. In some sense, there are those companies that have exposure to the financial services side of it or the lending side of it. Maybe at least the most primitive kind of financial services exposure you can get are companies that either have REIT kind of exposure or so act like REITs for the sector or are REITs for the sector, or those companies that also are just secured lenders into the sector. So there's that's been a theme over the last 18 months that's been important for us. But at its core, we're invested in, we think, the biggest, most profitable, most resilient and strategically positioned companies in the U.S. and Canada and globally. Right now for us, 70% of the exposure is U.S. Or U.S. at least centric or focused. But we clearly, Canada was the first country to really federalize in a way that was significant, and that created a lot of mismatches in terms of the size of that market and the market caps of those companies. I think at this point you've had a reweighting of where Canada really belongs, and yet there remain a couple companies that I think in Canada that are worth owning here. And I think there was a lot of anxiety and angst about this at one point. Canadian companies could list on the New York Stock Exchange, but U.S. companies couldn't. Canadian companies had market caps that were 5 times the size of U.S. companies, and yet their market is $5 billion. The U.S. market is, even the legal stuff, not counting illicit, and is 5 times that. It was totally at odds. A lot of people, I think, there's been a lot of wasted energy on that. It's not wasted in terms of how you were analyzing the market, because the reality is, most of all the Canadian companies built way too much capacity, burned through way too much cash. It has nothing to do with being Canadian. It has to do with they got a ton of capital, and I think the way the government rolled out that industry, it's easy to look at some problems in hindsight. Again, the U.S. is making plenty of mistakes on their own here. But I do think that there is a very different approach. And look, we have a different approach as investors to, are you investing in companies that are asset heavy? Are you investing in companies that are asset light? In a world where cost of capital has gone through the roof and access to capital has become even more restrictive, we have to think about those things. And we do think about them differently than we did 2 years ago. But I think, right now, in terms of outlook and in terms of what investors should be looking for, one of the things that I think has been, you asked me about how much is the federal and the legal landscape priced in, or lack thereof priced in, and even during 2022, when we'd already taken a lot of air out of that sale, even before we had that year-end disappointment. But early in the year, what I hear most from not dedicated cannabis investors, but my friends that are investing in other sectors and are investing in consumer and this and that, and they'd say to me, and Tim, I'm not worried about the headlines around the federal. I'm not worried about there's no stigma for us. We can invest here. My biggest issue with investing in cannabis right now is that I don't know what the margin profile of the industry is. I don't know what the multiples these companies should trade at, even in a world where they are legal. Cannabis is a commodity, right? I mean, are there really brands? Are there, is this discretionary? Is it staples? So I think those are the things that are, by the way, they're part of the evolution of the industry, and it's growing sophistication that comes with that. It used to be as simply like, yeah, is it going to be legalized, or does this guy have, does this company have, a big balance sheet? Does this company, do they have these 5 licenses? At one point you were maybe buying the company that had licenses in 20 states, whether those businesses were profitable or not. So I think the most important thing, and the thing that we continue to evolve and do, is find the companies that are operationally efficient and that are finding a way to either hold their margins or at least get to a place where there's a sustainable free cash flow business. Because right now, even outside of the cannabis industry, I think that's what investors are looking for. So it's a fascinating time, because the good news here is sentiment couldn't be lower. The good news here is that these companies trade at 1 to 2 times sales, and maybe they should, if they're not taxed on a normal way. But that even some of the bigger companies are trading at 3 to 4 times adjusted EBITDA. So it's not an industry that's expensive, but in fact you could argue it's really cheap. But the certainly relative to itself, certainly relative to where we were, I think the things that investors should be excited about are that you do have big companies that have been successful, and big means there's still a bunch of companies that are kind of north of $1 billion that in market cap that I think are here today, here tomorrow, that are better operators, that have gotten been through multiple cycles and have proven that they're survivors. So that certainly plays into part of how and who we're investing in.
Yeah, absolutely. And I'm glad we were able to cover off that valuation point, because I think that's an important part of the investment thesis here. But just to cover off your management of the portfolio, I imagine active management is incredibly crucial in a sector and a theme like this. Is it important you're able to adjust those holdings on a daily basis, though? Is is that shorter time frame necessary to maximize your performance in a space like this? And as a result, are you trading in and out of positions to capitalize on price action? How does that work?
That's a great question because I think as my long short equity hedge fund managers had, is had my background is doing that. In Canada, we are not doing that. We have the ability to do it, yeah, but again, I think liquidity makes it challenging to do that too. And I think you could you really could you could wrap yourself up in the middle of some volatility at times. I think it's important. I think there's a lot of alpha that can be generated by finding these extreme momentum places. Clearly, in hindsight, fading some of these extraordinary moves around the excitement of the federal is something that you could have made a lot of money in. What I also say though is that in markets, especially markets that are volatile and volatile to the downside, fund managers don't tend to get fired on the way down for either being in line with a drawdown in an industry. If you underperform or if you do some things that are clearly off sides, that's different. But where you really have a problem is if you're not invested when the market's going up, and if you're not getting the upside. People investing in cannabis want that upside. They want to be invested. So where I think we've chosen to be a little bit more active is where we've been adjusting some of the cash in the portfolio. And again, no more than, we could never have any more than 20% cash in the portfolio. But I think there's part of that is where I think we are making adjustments. I think, look, we are trying to be active around re-rating events for particular companies, either maybe a terrible earnings release, left an opportunity to be adding to a company we like, and for whatever reasons we made a view that was not appropriate. There's a lot of kind of correlation of one investing in cannabis. So at times, I think there really has been an opportunity to be more active. What I think is critical is that we don't need to wait for quarter end or month end to make changes to the portfolio if we see an opportunity or if we see a corporate governance risk. We don't have to wait for that company to blow up or quarterly. I mean, that to me is the most important part of active management in cannabis. I think if in 3 years to 5 years, where I hope this industry is, I think we can be trading a lot more actively, especially in higher liquidity backdrops for names. And I think that's going to be how the industry continues to evolve. And I think the managers that are, have that kind of a background will do well. I think right now it's been about being thoughtful about stock picking, avoiding companies that have been corporate governance nightmares, and not getting too drawn into some of the euphoria in the sector.
Got it. Okay, well, let's finish with a couple of questions just on the constituents within the portfolio, just to make it a little less abstract for the listeners. You mentioned your cash position, which I think is around 10%, but then your other larger weightings in the fund at the moment are multi-state operators like Tilray, for example, which when I looked yesterday commanded a 9.79% weighting. So I imagine it's around the same today, but you can correct me if I'm wrong. But I'm interested about Tilray. It's a company that I think even a lot of listeners that aren't that familiar with cannabis will have heard of. So what specifically do you like about Tilray?
So two things. Tilray is a Canadian company, so it's a Canadian LP, and technically it's not a multi-state operator. It's actually a company that has I think a significant U.S. footprint. Their footprint in the U.S. is as much around exposure. They have the spirits industry, so liquor, beer, and then even some distribution, some CBD, and they have a major. They're the largest player in Europe, especially on the distribution side. It's important to know that Tilray is also one of these companies that I think was one of the early Canadian companies that had this extraordinary market response because it was traded on the NASDAQ and it got follow through, and it was and really we never owned Tilray for the first year and a half of this fund. In fact, we didn't even own Tilray until they merged with another Canadian company called Afria that we
Right.
thought was the best operator and the most profitable operator in Canada. And so that's when we began to not only did we have a Tilray position as a result of that merger, but then we started to add. Tilray has also made a kind of an optionality, the optionality around investing in the U.S. So they bought some of the MedMen assets, which was a big operator in the U.S. I think upon federal legalization, they're positioned to exercise that option. So I think they're very well positioned. I think of them as really, one of the few big global cannabis companies that really, Irwin Simon is the CEO. He's got a background in CPG. He's got a background in consumer products. And I think there was a lot of criticism about the exposure that they took in the U.S. To buy, a distillery, and to buy a couple of beer companies. They own Sweetwater. They own Montauk Brewers. These are like really popular craft brews, but they're not cannabis companies. And people said, well, hey, are you trying to like put the wool over on us and say this is, like we're in the U.S. See, no, I think it was a thought about we wanted to bolt on cash flow generative businesses. I think there's a view at some point that the beverage segment within cannabis, so THC beverages, will be a very big segment. I think it will be. So I think these are really smart moves. I mean, Tilray's had some of the same problems as all the other companies. They've burned through a lot of cash. The market in Canada is very limited. And just back to what people will see when they log in to look at the constituents of CNBS. I say this about any ETF. Look under the hood. See what the ETF actually owns. I mean, that's whether you're owning a tech ETF or a home builders ETF. I mean, the largest position in the home builders ETF is not a home builder. So something that people will also see. I just want to clarify this too, because if you look in many places, and I think whether it's on a Bloomberg or even on a Reuters or maybe even on the CNBC site, not CNBS, but like someone like CNBC or another big financial media, you often won't see a lot of the U.S. exposure that we have because we own these positions through total return swaps. So a company like Green Thumb or Cureleaf, these are the two largest operators in the U.S. And we own them via swap because, again, it's a federally illegal landscape. We're a U.S. 40 Act fund, which means that we can't be investing in federally illegal stuff. We got a legal opinion. We have the ability, though, to own these companies essentially on swap. So we do own them. But often what you won't see that exposure in a lot of the description pages. Certainly you will if you go to the Amplify site and you look at our tear sheet and you look at the printout. But I want to explain that because a lot of people are like, well, it doesn't say you really own all these companies. In fact, depending on where you look, you might not see that. But no, the largest proportion of our balance sheet, really, Tilray, which is a Canadian LP with U.S. exposure, European exposure, and Canadian exposure, you can see that. But Green Thumb, Cureleaf, Trulieve, Cresco Labs, these companies are core positions at the top of the balance sheet in the portfolio because they are the biggest companies in the U.S. And they are the companies that we think are winners here, even in a difficult environment. So I just want to make all that clear.
Yeah, absolutely. I think it's an important point to clarify. And I think a fascinating insight to end on, actually. I think, this conversation could have lasted another hour or even two. So I'll have to get you back on for another episode. But I think
I'd love to do this again. It is a complicated industry. And I think for the retail investor, whether in UK, Europe, US, this is a fascinating industry, one that I think a lot of people want exposure to. But it's not been easy. It's complicated, and things like what do you own, where do you own it, how do you own it, in what form. This is part of what we're supposed to do as an ETF and kind of demystify and destigmatize that.
Yeah, absolutely, completely agree. Well, I think that just leaves me to say thank you very, very much for joining us on the podcast. It's been a real pleasure.
I really enjoyed the time. This is a great forum to talk about it. Sometimes we don't get this amount of time to have a thoughtful conversation. So I'm ready to come back at any time. There will be news, I'm sure, in the cannabis space evolving. So we're ready to talk about it.